Good morning, everybody. It's 2 hours before the open. I've had my second cup of coffee, so I'm ready to go. Want to talk about the process of finding a great trade and what happens. Typically, you're going to be looking for trades the night before. You find something that's really compelling, and you're super excited to have the market open the next day because you can't wait to pounce on it. Well, that was a situation Wednesday night. I recorded a video after the close and I highlighted a trade. Incidentally, all of my videos start with a new trade from the prior day and we review how that trade did. So I'm not showing you P&Ls that could be photoshopped. I'm giving you actual trade ideas that you can act on because I want you to see for yourself that this systematic trading approach really works. So we come in Thursday morning. We are super excited to get in this trade. You can see downward sloping trend line on Apple breached to the upside. This is the bar from Wednesday. Heavy volume, relative strength. Checkboxes marked. All right. Major technical breakout, heavy volume, relative strength. Those are the things that I need to see on a daily chart. Here's the rub though. You come in Thursday morning, and I mentioned this in the video Wednesday night. Don't be all hot and bothered by this. If the market gaps higher, which we've seen a lot of gaps higher, take a deep breath and wait for the market to come in. Well, how would you know that the market's going to come in, Pete? Come on. You have to be able to take a look at the candles on a chart. And these green and these red boxes, they mean something. What does a red box mean? A red box means that the stock closed lower than it's open. Huh. So if I see a bunch of red boxes, what does that tell me? It tells me that there's a high likelihood that the market is going to be below the opening price at some point in time during the day, which means I should be passive. I should wait, let the market come in, watch for relative strength. That's exactly what happened yesterday. In my chat room, I said, do not buy this opening gap higher. 5-minute chart, there's your opening gap higher. How did I know? Well, first of all, we're near all-time high in the market. We've seen two-sided price action for the last couple of weeks, and we had negative overseas markets. So we did not have a springboard because overseas markets were higher. In fact, we had a drag on the market. So you'd want to wait for market support, let it come in, come in, come in. And as it does so, you're able to evaluate stocks with relative strength. So stocks that you found on Wednesday night, you're going to be watching them tick for tick versus the S&P 500. When you start to see them hold their own, so the ideal situation here, stock opens and it holds all of its gains or it's flat on the open, market bottom drops out, stock stays flat. That's what you're looking for. That's the relative strength that you want. So we come in, we get a bearish cross on the 10p indicator. Incidentally, everything I'm showing you is on Option Stalker, and it's proprietary. You can't get this trade signal anywhere else. Now, I have 10p working for the S&P 500 on a 5-minute basis. It's optimized for that time frame. We also have 10p working for individual stocks. We're going to take a look at that as well. So here you get a bearish cross. Spike in the indicator, bearish cross. You don't get it here. You don't get it here. You don't get it here. You get it right up here, telling you, hey, we need to be a little bit careful in here. The market looks weak. Market first, market first, market first. You see so many traders come in. Oh my gosh, the market's gapping higher. I got to have some. I got to get some. I got to buy it right now. They rush in, and then all of a sudden, oh no. Oh no. I didn't like that bar at all. Oh well, here we go. Maybe it'll bounce a little bit. I got to stop out. Oh my God. I never should have taken that trade. That's not how you need to be. You need to be relaxed. You need to be in control. You need to wait for your entry points to set up. If we go into a daily chart, remember, I told you, what are the candles telling us? when you see tiny little bodied candles on the S&P 500, it tells you that the intraday ranges are compressed, that buyers and sellers are in equilibrium. That means you can expect two-sided price action. We also know that because we're near the all-time high, that there are going to be some headwinds, there are going to be some profit takers out there, as opposed to down here where you get this nice big market drop, support, 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 support. Okay, we get a little bit of a bounce. Now we have a higher low double bottom, downward sloping trend line, breach to the upside. Okay, this is a different story. Why? Because we're seeing green bars. What do green bars mean? Green bars mean you open on the low, close on the high, open on the low, close on the high. Okay, mindset for a day trader. Hey, this bounce can really have some momentum to it. I want to be aggressively long on the open, even if the market gaps higher. Market first, market first. So now we come in yesterday, we could see, there's nothing much going on. I don't need to chase stocks with the market at an all-time high. So we get some long red bars on the open that help us identify relative strength. You're watching Apple because that's the stock that I highlighted. So you get this nice big trough in the market. Then what? How do we know that the low is in for the market? Well, we don't, but you can see here that we've got a bullish hammer off of the low. Okay, that's a pretty good sign. And that bullish hammer goes halfway through this long red bar. So the retracement is substantial. Doji, so this bounce has been able to hold its gains, and then whoosh, another green bar. When I saw this, I said, okay, this looks pretty good in here. Plus, we have a 10p bullish cross. Deep trough, red line above blue. Right in here, it's saying, yeah, you want to be long. This is actually where I bought futures. I told my members, I said, I'm looking for a pullback. Took half a position here, saw that pullback, saw that almost bullish engulfing candle right there. This is where I bought, this is where I sold. So really nice 13-point S&P 500 gain posted in the chat room, time stamped. This is all very legitimate, which incidentally, I don't usually promote other people's Twitter feeds, but one of my featured traders is fantastic, and he has mastered the system. He posts all of his trades on Twitter. I'll have a link in the description below. Here's his day yesterday: 39 wins, 3 scratches, 2 trades still on for swinging. And every single one of them was posted. So you can see this system works. In any event, let's get back to trading. We've got this bullish cross. This is where you want to start getting into your stocks if they have all the right ingredients. D1 technical breakout, heavy volume, relative strength, drill down. Now we want to go through the same process on a 5-minute chart. So this is what the price action looked like Wednesday night. This is what the price action looked like yesterday. Man, was that a big trade. We made a killing on it. So let's take a look at what happened. You can see. So the market opened lower. The market sold off hard. Orange line above zero, there's your relative strength. But there was no need to rush into this trade. Downward sloping trend line right in here. This is all nice. Oh, that's a nice long green candle through the high of the day. Put up the S&P overlay, and you can see market's starting to lift off in here. Now the stock is actually starting to also gain some momentum. This is where you want to be in, right here. I'll put up the 10p indicator as well so that you can see where that came into play. And I'm going to expand this area a little bit, and then you'll be able to see the indicator a little bit more clearly. Here you can see, right in here, you've got bullish cross. Okay, so now we've got the bullish cross we need on 10p. We're just waiting for it to gain its relative strength, which is right in here. This is where you want to be buying. You did not need to chase the open and then lift off. Now, some of you are going to be watching this going, oh, Pete, come on. That was a lucky trade because Apple had news. And that's why the stock went up. It had nothing to do with your indicators or anything. If I had a nickel for every time I heard that, here's the deal. We are watching price movement. And the price movement is telling us when big money is moving in and out of a stock. And we get to see that well in advance because that's what we're measuring. Do you think that anybody knew what Apple was working on? Yeah, I think they probably did. Do you think that anyone knew that Apple was going to be releasing a statement? Yeah, they probably did. And they probably traded on that news. And when they traded on that news, guess what happened when they traded on that pending news, I should say? What happened? We got this big move on Wednesday. We got that big volume on Wednesday out of nowhere. The market was flat. The market was trapped in an inside day. It went nowhere. Well, why would Apple all of a sudden gain attention when the market's not doing a dang thing? See the volume spike right there. Huh. Maybe it's because people were buying it ahead of the news release that they're moving forward with their cars and their automated systems for driving. And then the news comes out and the stock rallies. If you follow price, you're going to be ahead of the news because the institutions leave a trail of breadcrumbs. And that's what we're trying to do is follow those breadcrumbs. So, a couple of points. First of all, don't chase rallies on the open, gaps higher, wait for the market to come in. Once the market comes in and forms support, you can see that by the bullish 10p cross. You can also see it, if you don't have 10p, you can also see it by some of the candlestick patterns that are starting to unfold. So now you know it's time for me to start looking at my stocks that I want to buy. Then you're looking for relative strength on the 5-minute chart. That's when you want to be long. You've got a market tailwind and you've got a stock that's starting to gain some relative strength. That's how it works. I hope all of you made a ton of money on Apple because I gave you that pick Wednesday night. So you had 12 hours to prepare for this trade and to sit back and watch it carefully. And I told you not to buy it on the open. Be patient. Let things unfold. So if you're doing your searches and you're flipping through all sorts of charts yesterday, you ran across Amazon. Ooh, this is the best of all scenarios. You've got stacked green candles here. Stock blows through the prior day's high when the market is down, down, down. Look at that relative strength. So as the market is starting to come in and form support right in here, you can see first little lift off, the stock is gone. There's a bearish flag formation, stock lifts off. You're usually going to get 3 of these little bull flags. I'm sorry, I hope I didn't say bearish flag. It's a bullish flag. Stock pulls back, downward sloping trend line. There's your breakout. 1, 2, 3. So that's typical because 3 bullish flags, and after that, the stock is probably 30 bars into the rally, and some of that momentum will start to wane. But you can see how Amazon actually did continue to move higher, put up that daily chart. I love this breakout. There's a bullish flag right there. There's your flagpole. See the tails right there. Connect those. Massive breakout, big volume. I will bet you that Amazon moves higher today. I really like it. But I'm going to go into a couple of other searches. This is a time to be very passive. Excuse me. The S&P futures right now are down 11 points. This is one of my favorite trading setups. Why? Because I have a long-term market rally, and this gives me an opportunity on the open to evaluate relative strength, relative weakness, and to wait for that market support and then to buy. And sometimes on these dips on the open, they don't last very long. You've got to be a little bit more aggressive. So we'll be watching for support on the open, and then I'm going to show you a few stocks that I like. I've already shown you Amazon. Amazon could just as well be my pick of the day. I'm going to zoom out very quickly to take a look at where we stand on a longer term chart. You can see that it does still have some resistance here, but we're a long way off from it. Retailers in general did very well yesterday. So we'll go back to normal view. Let's take a look. I'm just going to go into one search in Option Stalker. Pop bull. It's one of my favorite searches. It is more of a swing trading search. I'm going to take off the SPY overlay. We also want to make sure that we've got the major moving averages up so that we know where they come into play. And so there's the setup. We've got a breakout through this horizontal resistance. We have a flagpole here, connect all of those lines right in here, and now you see the bullish flag formation. Look at that bullish hammer with the stock closing on the high of the day. KSS, I like it. Look at that strength. Beautiful. Now again, now we've got two stocks in the retail sector, Amazon and Kohl's. Is that sector going to be hot again today? Maybe, maybe not. We'll be keeping an eye on it though. Now take a look at another stock, JD, that was in the list. First, we start with the daily chart. Choppy, okay? I don't like this chunky kind of price movement. I want to see something that's nice and tight. So I would take a pass on that, even though it is breaking out, probably has some momentum to go higher. This is nice. Got a breakout. There's your earnings after the close. There's your reaction to earnings. Breakout through this downward sloping trend line. New all-time high. Nice. But I don't like the retracement off the high here. I don't like the fact that the stock was not able to finish above the open. So interesting, but not compelling. So I'm going to drop a GTC alert line at the top of that bar in case we get through it. MRVL, hover over the E. We can see we got earnings coming up on December 2nd. So we've got a few weeks to make this play. Beautiful little breakout right in here. New all-time high. You can see the stock is not a big mover, but it is a consistent mover. So you could sell an out-of-the-money bullish put spread on this with very little time till expiration. Needs to expire before that earnings announcement date. You could take advantage of that. That way you don't need the stock to power higher. But I like this. I do think a call debit spread could also work here. You do not need to rush in on the open to buy anything. Make sure that the market has support. If the S&P futures are down 12 points right now like they are, they could be down 25 or 30 points. This stock will give you an opportunity for a better entry point. Does a better entry point necessarily mean at a lower price? No, it doesn't necessarily mean that. It could mean that we're watching the stock as the market is dropping and we're watching the stock maintain its bid, maintain its bid, maintain its bid. That tells us that institutions are hungry for shares of that stock because a normal stock would be declining when the market is going down. But any selling pressure is offset by those buyers because they're super aggressive. So when the market finally does find support, you know that that bid is strong in that stock. You know that you'll have a market tailwind because the market is going to rally. That fuels all stocks. Plus, you have pent up buying on this stock. Whoosh, off it goes. That's how it works. MRVL could be my pick of the day. You go in, take a look at another one. BX, beautiful series of higher lows, breakout to a new high. This stock looks like it wants to go, but it doesn't have the volume. I want the dang volume. I really want volume. Not a lot of volume right here on MRVL either. KSS earnings, yeah, that one's going to have big volume. KSS may be the one that I like. AMZN, we're going to take one more look at that and see the volume. Aha, big volume. I do like Amazon. I think Amazon has got to be my pick of the day just because it's got unbelievable option liquidity. It's had relative strength for quite a while right now. You can see the strength during the course of the day and the fact that the stock was able to close on its high of the day. I like all those factors. Let's see what happens. This is what you're going to be watching for early in the day today. Put up the SPY. So let's pretend that we were coming in yesterday and we had Amazon on our radar, and you got the market opening like this: chunk, ka-chunk, 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 down, 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 which is what the market may do today. And we're watching Amazon hold its bid. So we know as soon as we have that market support, this stock is going to take off. So that's what you want to wait for. You want to wait for that market support right in here. Yes, you could have gotten in here, but you didn't know if this move was for real or not, and you certainly knew there was some heavy market selling taking place. Stock could have gone up a few bars and then long red bar down. You would have been trapped like mad. But once you have that market support in here, and you've been able to see that relative strength tick for tick with the S&P 500, downward sloping trend line, bullish flag, relative strength. You've got everything that you need to get on board this trade. That's what you should be doing today. Be really, really patient. Don't rush in. Market is at an all-time high. We're seeing choppy two-sided trading. There will be opportunities to get long, and chances are you'll be able to wait for a half an hour or so, evaluate that relative strength, and then let the market take off. So again, please look for that link to the Twitter feed. Harry Seldon, that's his username. It's not his real name. That's what he uses in the chat room. He's a featured trader. He posts his trades in the chat room real time. He's the real deal. He's an excellent trader. You can also follow what he's doing by going into Real Day Trading on Twitter and following the feed there. I'll post a link to it, and I'll have a link to my Twitter feed as well. Good luck with your trading. Be patient. Big time breakouts on the stock through technical resistance, D1, heavy volume, relative strength, drill down, make sure the stock has heavy volume today, make sure the stock is through the prior day's high, make sure that volume is still there, relative strength, wait for market support. As soon as you have market support, get in the stock, set passive targets. Don't expect a monster move. We could see a breakout on a Friday to a new all-time high in the market. This is a bullish flag formation forming on the market, bullish hammer right here. So the market looks like it wants to lift off today, which, by the way, Fridays, the last hour of the day, one of my favorite trading moments of the week, because that's when we're looking for option lottery plays, options that expire in the last hour of trading during the course of the week. This is normal options expiration, so there'll be lots of candidates for us to look at. Good luck with your trading. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.